Okay, so we have our very last panel group, and it's a big panel group. There's 5 people on the stage, and I think it's probably appropriate that we end with Rodolfo Sánchez-Colberg and his quadruplet group here talking about investment opportunities in Puerto Rico. So with that, let me introduce Rodolfo. Rodolfo is the co-founder and managing partner of Parliament Capital Management. Probably many of you know him actually already. With his extensive background in management and information systems, Rodolfo leads a San Juan-based fund manager that has provided over $500 million in loans to small and middle market companies in Puerto Rico and other significant Hispanic markets in the United States. With him is Omar Zinoveev. I always get your last name wrong, and I'd know it. It currently manages Banco Popular's Impact Fund, which is the first of its kind in Puerto Rico. It's seeking investment opportunities in startup companies that present innovative solutions to solve social and economic challenges in the communities in which Banco Popular operates. And those for you who don't know, Popular has a massive investment in Puerto Rico in changing Puerto Rico's social issues. Gualberto Rodríguez is the co-founder of several organizations, including Nutriendo Puerto Rico, a nonprofit that addresses health inequalities in Puerto Rico by strengthening the nutritional security of its residents. He's also the managing partner and co-founder of Semillero Partners, a venture capital firm investing in purpose-driven sustainable food and food tech companies. Anita, where are you? Anita. I'll see you. Anita Pramoda is the CEO of Owned Outcomes, a software company providing analytical help to healthcare providers and payers as they seek transparency and financial sustainability, in addition to clinical outcomes and patient care. She also serves as an executive advisor to Technology Crossover Ventures, and she's on the board of Health Catalyst, Dolly Health, Care, Health Edge, and Press Gaining. With that, actually, we have everyone here, right? Yep.
Yeah, Gualberto decided to take a meeting right now, so he's outside having a...
That's Gualberto.
But I'm sure
I'm going to go hunt him down.
I'm sure he'll make... Yeah, you can go and do that. So I was supposed to be moderating, but I decided that Anita was much better at that than me. So we're going to try to make this fun. We're going to try to make this interactive. And obviously, we're the last panel before cocktail hour. So that's not good, typically. So Anita, thanks for taking the challenge to host this conversation.
So if you are between somebody and their drinks, I have a second peace offering for you, which is this panel is a bunch of local investors, local market experts, and they can show you the money. So the question for each one of you, what have you not heard today, and what would you like to learn from this panel to lean into Puerto Rico? And just for clarity, the way I qualified to be on this panel is I signed up for Spanish 101. Anyone else? Spanish 101? 3 cheers to that. Questions? Where do you want to hear about investing in Puerto Rico? Well, if people are quiet, well, I'll start with you, Rudy.
Okay.
What do people ask you when you are out fundraising about opportunities in Puerto Rico?
Oh, thanks for that. I think the question that I get asked the most is why Puerto Rico, right? And I think that's part of the reason why we're here. Puerto Rico is misunderstood by most. There's a ton of information gaps. There's lack of data. There's, again, misconceptions about the size of the opportunity, about the sophistication of the market. And although all that sounds negative, it's actually very good from the investment point of view, because that's where we're able to generate above market returns in a way that is actually very well protected from the downside. So the risk adjusted returns that we're able to find in Puerto Rico are very significant. I think one of the main questions is, well, again, why Puerto Rico? It's a small island in the Caribbean. We don't. Well, sometimes we don't invest internationally, which is embarrassing. And the answer is very interesting because we tell them, well, it's $100 billion economy, 3.2 million inhabitants. We're actually larger than about 20 of the states. So if you're willing to invest in New Mexico, and you're willing to invest in New Hampshire, and you're willing to invest in a lot of other states, there's no reason why you shouldn't invest in Puerto Rico. And from our point of view, we're a credit focused fund. That gap in knowledge, that gap in information, a lot of barriers to entry for the capital that would be willing to invest in Puerto Rico has created a market that is significantly underserved, a market that is very large, very deep, and us that are up here are barely scratching the surface. And again, I think we're going to get to the point where you're going to be able to unveil that this opportunity to invest locally is quite significant.
So when I think about Puerto Rico, I come from healthcare. So I go around the island, I compare Puerto Rico to Maryland. Maryland has 6 million residents. Puerto Rico has 1/2, roughly. And Maryland has, let's take ambulatory surgical centers. It's a way for you to go have your procedure on an outpatient setting, come back and get home and get better at home, lower your hospital-acquired infections, lower costs of care. There's any number of good reasons why you should choose that, right? And Maryland has 638 ASCs compared to Puerto Rico. I think I can count them from the fingers of my hand. And I see the opportunity. We have an aging population. We have an imperative to want to cut costs. I mean, whether that's ambulatory surgical centers or whether that's infusion chairs as opposed to inpatient opportunities, everywhere I see underinvestment and opportunity. What do you see? What inspires you when you think about Puerto Rico and the opportunity? Gualberto?
For example, in Puerto Rico, you got a confluence of factors interesting for growing companies in the food sector that we invest in. To your point, we get in this density, we get largest restaurant operator in the world is Subway. They're here. Largest retail operator in the world is Walmart. They're here. And you can get a local company that is ready to meet those specs. By the way, Subway, Burger King, McDonald's, they don't have a lower spec for Puerto Rico suppliers, and because their brand risk is huge. Same thing with Hilton hotels. They cannot afford an outbreak of listeria in what they serve customers here, or else the brand is. So it gives a playground for innovative companies to meet that spec, and then we have been able to take that and take them into 7 Sam's Club Florida, where the Puerto Rican community there is twice as well off of the one here. So it's kind of an on-ramp to make Puerto Rico a lab for playing in that space. And then to your point, on the social side, I see a lot of underserved. We see a lot of underserved spaces where entrepreneurs with the confluence of factors like capital and know-how and support can actually launch brands through that on-ramp into large systems in the States.
Oh, that's fascinating. Omar, you represent Banco Popular, and you are investing in the infrastructure, innovative infrastructure for the future, as well as, innovation and empowerment of the populace, if you will. How do you think about inspiration?
But first of all, I want to answer, I guess, all the questions that you have asked. And when I don't have to, because, I have the capital of the corporation, but if someone asks me why Puerto Rico, I ask them back, why not? Look at this, right? We are I'm not from Puerto Rico, I'm from Uruguay, but I've been here for many years, and I learned to love, the island. I seen, all the good, the bad, and the ugly, but I'm sure that when you put in, when you measure it, the good is definitely, much more than the other thing. We are in the right spot geographically between, United States and Latin America. We speak both, languages. We have a mix of both cultures, and so this is this is a place that it is, I guess, behind the U.S. in certain things, but that means that there are a lot of opportunities this year. So what inspires me is to communicate this to everyone, as tenant, to also have my kids, right, to have the option to stay here, not to have to go to the U.S. or anywhere else to find best opportunities. I would love them to stay. Even if they go to study outside, I would love them to come back because there are good jobs here that that are worth it. Hey, I mean, it is worth to stay for for family and friends and all that, but definitely finding well-paid jobs. I think is very important, and I think the bank, through this fund that we started, which actually we have many other funds that I can talk later, but we are trying to to fund this gap, the capital gap that is in the island, that I think eventually will have a spillover effect, and bring capital from outside, other good things.
Thanks for sharing that, Omar. Capital. So when I think about capital, I think about it on a spectrum. Really tell us what inspires you, and where in the spectrum do you find opportunity that you lean into?
So I guess, I mean, the common theme here is underserved populations, underserved markets. And that has two sides of the equation that are very important for us. Number one, obviously, we're helping move Puerto Rico forward. We're helping the Hispanic communities in the U.S. Get equitable access to capital. So there's a very strong social aspect to that. But I mean, I don't want to sound ultra capitalistic here, but at the end, the numbers are fantastic, right? So for us, the true return, the ROI also comes from financial returns. I mean, we are financially motivated, and our investors want us to provide the right set of returns. And when we're talking, I mean, I want to go back to the kind of the why Puerto Rico point of view. Yes, we want to make it a better place. We want to move some small businesses forward. But the opportunity is huge when you compare it to any other state. So Puerto Rico has the local banks, the commercial banks, have around $16 to $17 billion on commercial loans. On a $100 billion GDP economy, 16-17%. The average, that same number, in the U.S. is around 30-35%. If you add in private capital to that number in the U.S., it goes up to 50 to 56%. So we're talking about that Puerto Rico, just if the local commercial banking sector were to provide the right level of service to the small businesses, commercial lending should be at least $30 billion from the banks. If you add in private capital, it should be in the $50 billion. We're nowhere near that. I mean, all the private lenders together, all the banks together, we're not even close, not even to the 30 billion mark. So the opportunity is huge. And things are finally going the right way from an economic point of view. We've said it many times today. There's a lot of capital coming into the island. So things are looking bright, and the delta is huge. So there's a lot of opportunity for investment.
Rudy, when I think about that delta, I also think about, hey, what does it take to underwrite that? Do I have the right information? Do I have know-how? Do I deeply understand this market? And the answer is no. But what encourages me is that in a market that's that attractive, that I don't understand, that there is a cadre of professional money managers that are able to bring that local market expertise, and they have firms with meaningful amounts of governance in them. And that gives people like me access to Puerto Rico as an investment opportunity. So tell me how each one of you thinks about underwriting risk in Puerto Rico.
I'll go first, just because it's the easiest one, probably. So our companies are typically existing companies with revenue, with collateral. So we're in a very plain vanilla side of the equation, right? We're dealing with risk that is somewhat quantifiable from a financial point of view, somewhat quantifiable from an organizational and governance point of view, because you have management, you have kind of policies and procedures that you can underwrite. And then we go to character, right? Character is one of the 5 C's of credit. And we live in a culture, and not only in Puerto Rico, but also in the States. When you're dealing with Hispanic populations, it's very, very easy to take data about people's character. It is, you can ask around and you're going to know if people are good actors or bad actors. People know. So I think we spoke about this earlier. The social element of it is very powerful in our community and in the culture that we operate in. So we do factor that in quite significantly when we're underwriting. These guys have a much tougher job than we do in underwriting because of where they are in the spectrum of capital.
So thinking about risk, I mean, I think another one is now, too rosy, right? But I think the biggest risk that we have here is not doing anything. Is that, there are many things that happen, right, in Puerto Rico over the last few years. They make crisis. So, how resilient the island is. There's a lot of new, capital and brains, coming into the island. We are, as I say, we are in a in a center position with a lot of opportunity. So there is all these things that are happening, and I don't know how many here like to surf, but I think this is a wave that you cannot let unsurf, right? Because this is there are so many things happening that I think when you think in the long term, you will look back and say, wow, what an opportunity we had on this place that that went through so many crises for so many years, and now it's rebounding, and all these new things are happening. So, but for us, right, it's not doing anything. It's the biggest risk. But when once we decide to do something, right, we are in the venture capital market. So, and we as a corporation are new into it. So definitely, we are being very careful how to measure risk, and the way we try to minimize that is by have a diversification of portfolio. We want to to invest in as many companies as we can, but we do want to find, and this is non-negotiable, right? We need to find the right founders, right? The right owners that we want to invest in, because if you don't have that trust, you have good character. I mean, I don't think it's a saying that it's no good business with a bad partner. So I think that's right. I mean, we need to find the best person. And as we said, I mean, here it's so easy to find out, right? For our good bad. So that's a big part of our diligence is to find out. To inquire, about who we are about to do business.
Yeah, we use a scorecard, about 17 variables, but I like to expand in 3 simple ones that adopted. It's sort of the jockey, the horse, and the race, right? Like the jockey is the founder, CEO. The horse is the organization set of processes, whatever is embedded in the organization. If for any reason the founder is not around, and the third is a race, industry competition they're stepping into. From that, I'll share things that we've learned, and in 3. One is exit risk. For a small market, I mean, it's a $5 billion retail market, companies here, but there's not a lot of M&A activity. So it's a risk. We have to start with a pretty good thesis that we're building a company or a feature that a company in Puerto Rico or outside will need and will rather buy than develop. So exit risk is one that I have to dedicate a lot of time to, because there isn't a very active ecosystem of buying, selling companies, and also the set of actors for each vertical. So we have to be very thoughtful about that. However, to your point before, we also know a little bit of the mentality of the legacy companies. And give you an example, we're in the process of selling a company, and our is that if we bring in interest from a company from outside of Puerto Rico, that only might prompt some of the incumbents to buy just to defend, because we know they're very defensive in their acquisition. So, but it has to be a credible threat that an international competitor, a regional competitor might put a threat in their local stability. So that's part of the way we're going about building that process. The second, which has to do with jockey, and both Omar and Rudy mentioned it,
the importance of that founder, that CEO. What we've learned the hard way is that although there is a great culture of honoring debt, there is not equivalent on the equity side of the equation. To be explicitly, there's very few entrepreneurs that have any experience handling third-party equity capital. And that sounded to us like it was just a technical issue, but it's really what the experience of the last 7 years of investing in companies has revealed, that it's a cultural issue. There is a narrative of they have money, that this is my company, as opposed to like, this is our company and you're stewarding for capital, and it's out of ignorance and out of experience. So now we really look hard for that needle in the haystack, and we're very sensitive in our underwriting to mentality. And some of these, they have gone through great accelerators, and they know the song and dance pitching. When push comes to shove, they actually don't know how to honor equity capital in different situations. So that is something that through pain we have become have built that into our process now, to seek that unconscious attitude towards equity capital from third parties. And the final part, which has to do with the race, the competition or the competitive set, because of the relationships that we have, it's fairly easy to, for example, start backwards and go to the buyers of large chains like Walmart or Costco and say, which one of these local products you wish you had more of, but somehow the company cannot provide you with everything you want to buy. But you like them, you like their product, you like the way they treat, you like the way they price, you like the responsiveness. So that's a great thing that we have in the Puerto Rico market that we don't have when we invest outside, is that just buy somebody a coffee and get that kind of intel as to which are the great companies that with capital and mentorship would satisfy demand that's already there, that it's underserved. So that's kind of things and it's easy to find about competitors and who has an anatomy or a mental block that will not respond with growth to growth, because they have a lifestyle mentality. So it's fairly easy for us to x-ray who could be a better horse to bet on.
Wow, this is fascinating. When I think about risk, right, I think about 100-year events, 10-year events, what have you. And you just calculate 8 working hours a day. Let's say an event happens once per second. That's about 1 million events roughly every 35 days, which means once in 35 days, we will roughly see a miracle. And once in 35 days, we'll roughly see a disaster. Littlewood's Law, right? So let's go back to your lives in Puerto Rico. Each one of you have been abroad, have lived abroad, have had a chance to sell abroad, vacation abroad. You have many options. Tell us about when Puerto Rico tested you and what made you come back and what made you double down.
I'll mention a very recent one. Fiona was hard for me. Rudy, after Maria, Rudy led our ecosystem and a reflection of what an incredible opportunity we had to design behind the empirical stress tests that so many of all our system went through. And what I observed after Fiona was that the private sector and the NGOs everybody had stepped up the contingency plans or redundancies. Everybody executed better. However, our government seemed to have never experienced Maria or learned from it. And that was disheartening. That was it took me a few days to, people like sitting here, like after Maria, we were out there when the water was still dripping from trees and taking action. This time that really hit me. I couldn't believe that there seemed to be no learning from that experience in the government sector, and that was disheartening because we worked really hard on preparing our organizations and our communities and our buildings and our neighborhoods and our schools to be resilient. And the execution, somebody's got to turn on the lights. Somebody's got to figure this out. Somebody's got to clear the roads. It cannot all be lean on the community, lean on the private sector, lean on the NGOs, but keep all the resources. That's not right. So that was hard.
And what made you double down?
My love for the ocean.
That's one way to do it. And
keeps
even
me
in that, take a look behind you, right? It's inspiring views. That's why. Your reason, Omar?
So I think that it's not a challenge per se. We had a lot of challenges for disaster. I think the biggest thing that we have to overcome is I don't know, call it about the negative way of sometimes with the population that in that so bad. We have all these problems, we the money doesn't get here fast enough and all that. So sometimes I think that we are always looking north, right, to the U.S. and we don't look south, maybe other way, because when you see that and see how many opportunities Puerto Rico has, that if a natural disaster happens, all the money and the help that comes in and all that, and even if it's handled one way, that's something that not many countries or territories in the world have that. Because in my country, something like that happens, we screwed. We get maybe a loan from the World Bank or the IMF, but we have to pay it back with interest. So there is this negativity that for the lack of a better word, but that needs to be overcome, and that there are many good things here, and until people don't realize that, maybe they will not go the Hello? Did you hear everything I said? Oh. Yeah. I forgot what I said. So no. So until people don't realize the good opportunities, they won't go all the way. So they will be putting the brakes. So I think that is a challenge that all of us will come here to live and need to help overcome, because I think it's one of the main reasons, the main barriers, I guess, being.
Thank you, Rudy.
So quickly, I mean, obviously, I share probably the same. Puerto Rico has thrown us a little bit of everything in the last 15, 16 years, right? From natural disaster, political, fiscal issues, all that. So it's there, you can pick one and decide what to talk about each one. I think that what keeps us here and what encourages us is, and this is a word that is thrown around a lot. I think yesterday somebody mentioned that, is resiliency. I mean, every time we have a problem, the people stand up and start fixing or working towards fixing the problem. Even though they lack support from certain sectors, they still move forward. We've been in a recession, where we were in a recession 12, 13, 14 years. GDP was constantly at $100 billion. Retail sales were at $35 billion. So we were able to population decreased by 10, 15% in that time. GDP stayed pretty much the same, and the retail sales stayed pretty much the same. So there is a resiliency in the economy. There's a resiliency in the people. There's a resilience. Is it like something that you see that's tangible? You can see it in the streets after a disaster. You can see it in the streets after anything. You can see it in Christmas time and stuff like that. That is encouraging, because it's worth fighting for, right? It's not easy, but it's something worth fighting for and investing in.
No, thank you. Let me go to the audience. Why do each one? What is your inspiration for investing in Puerto Rico? I see local entrepreneurs. Brenda, what do you like about Puerto Rico? Go ahead.
Actually have a two-tier question. First of all, Rudy, thank you for putting this wonderful panel. First of all, when investing in Puerto Rico companies, what triggers your decision to invest? That's the first part. And second, in the underwriter process, what red flags do you seek not to invest in them? I take that, Rudy?
I'll take the first one, which was, what do we look for in companies that we want to invest in? What triggers our decision? So I think is whether we can be a catalyst for growth, right? So long story, but I come from the distressed credit background. I did a lot of hard stuff on the credit side for many years, and when we decided to launch Parliament, we decided to do it with a positive twist, right? We wanted to support companies that were growing. So for us, the catalyst is can we be that agent that moves the company forward, and that creates jobs, and that hopefully elevates the wealth and the well-being of the founders, the entrepreneurs, the employees, everybody in that is impacted, and that community that is impacted by that business. So at the end, it has a lot to do with the impact. We don't say we're an impact investing fund because we're not. Again, we're more financially focused, but the real trigger is that impact that we can provide. So that's really important for us.
I'll try and respond to it as someone that's learning about Puerto Rico, right? And I try to put decisions on a 2x2. Think of x-axis as the quality of the decision, and think of y-axis as the quality of the outcome, right? So first quadrant, good decision, good outcome. That tells me it's a fair world. The markets are functioning the way they should, and good things happen when right inputs are there, right? Third quadrant, bad decision and bad outcome. Well, you got paid for your stupidity. That also tells me markets are working well. The other two quadrants are the ones I worry about, which is how often do I see people make bad decisions and get a good outcome? And those are your false positives, and I worry about that dumb luck because you can't replicate that. When I try to understand manager performance, that's what I look for. And then the last one, the last quadrant is it was a good decision but a bad outcome, which is usually exogenous variables that contributed to a very, very bad outcome. And how often does that happen? Is this underwritable or not? Those are the things I worry about as a learner in the market. Go ahead.
Ricky, I'll summarize it into three. One is we have to see a path to return. We have to see multiple paths to the returns that clear our thresholds for a venture capital investment. Second, that the risks that we identify are manageable. They cannot, in our case, involve changing management. As Anita has a good phrase, I forget, but if you're changing management, you're most likely not going to hit your. So, can we work with this team, this leadership, to that path to returns? And then the third is overlaps a bit, is that somehow together, the secret sauce of coming together with this team, we can create something that by ourselves or by themselves cannot be created. So there has to be an element of secret sauce to the togetherness of it, so that we can pick up the phone or emails and already unlock barriers to value creation. It has to be within our reach of our domain. And then on the flags, that there are many. There are anything from our evaluation to ultimately a due diligence is very defensive process. We're looking for reasons not to invest. We're like it, and then we go in looking to create the anti case, so we can peel off. And there could be many things, but I would say that the one that we have learned is insurmountable is the leadership. Because it's an emerging company where the founder CEOs weighs a lot, processes, mentality, and energy, decision making. So that that has to be inspiring, that we can work through the problems that will emerge, that we can solve the problems, that we can pivot strategy. Coachability is a big thing for us. Humility with confidence, having the humility to how do they respond in front of adverse information. So we try to, the process of evaluating companies, we try to bring adverse information to see how they respond. If they get defensive, if they lean in with curiosity, because that one's really hard to overcome. Just bad management.
Omar, quick question for you. Sorry to interrupt you. As an institutional investor, how much does your approach to investment deviate much from the private equity side?
Really, well, I was gonna build up on what they say because most of the things they say, are very important for us. But because we are a fund, right? The fund that I manage has two missions, right? We have an impact, a social impact component, and a strategic component, right? So we cannot mix both things in one fund. So, but the issue to what they say, we look for companies that will provide us either with some strategic technology, to grow in the future, or definitely, that is doing something so good, right, in where we operate that makes sense for us to. So we're not only looking for financial returns. We need something else, and usually it's non-monetary, right?
Let's continue. Other questions from the audience? Yeah, go ahead.
Hi, thank you for the panel. When you're underwriting for same asset class, same risk, when you're comparing a company operating in Puerto Rico versus the mainland, do the company in Puerto Rico pay a premium and either for equity capital, debt capital, and how do you bridge that notion with your investors?
Oh, great.
I'm gonna tell you that one quickly. I personally think there is no, because we are in Puerto Rico, there's no additional risk, but the only one is, financial, right? So you don't want a company, you can invest in a company that only operates in Puerto Rico, but definitely you will get the returns that you need, to do a venture capital investment. So obviously, the company has operation in the U.S., it has, or Puerto Rican company who already expanded to the U.S. or other areas, it's easier to justify the valuation.
So when we were expanding into the U.S., we thought that we were going to get a lot of pushback on our pricing, and that what we were doing in Puerto Rico was going to sound weird to our stateside borrowers. But the reality is that we were seeing the same needs and the same underserved communities there. So at the end, we're doing exactly the same underwriting here and there. We're using pretty much the same pricing here and there. I think the only caveat that we've been trying to push, or the only significant difference that we've been pushing and changing, is personal guarantees. So we typically get personal guarantees in Puerto Rico on our loans, and in the U.S. they're not used to doing that. But still, we get them in the U.S. if we push a little bit harder. Our borrowers in particular are underserved, so they don't have access to capital. At the end, they need to get the money to do whatever they want to do to grow, or remain a lifestyle business and kind of stuck and grow very, very slow organically. So I don't think there's so far there hasn't been a change in structure or pricing between Puerto Rico and the U.S.
Yeah, we do. We use a 25% discount for Puerto Rico if it's a company only with Puerto Rico revenue. And once the plan is believable or has some traction or evidence that it can be beyond Puerto Rico, then that can change. Can change very favorably for the company. But and we're invested in 24 companies, 7 in Puerto Rico. The other 17 are U.S., Canada, 1 in Israel, and Latin America. So we see the variation. But Puerto Rico, 25% is the discount that we use.
And on an exit multiple basis, do you see acquirers value Puerto Rican revenue concentration differently than some of your other companies?
I mean, I think, if it's only Puerto Rico, yes, limited growth, so your multiples are be lower. But it's not related to, the island per se. It's just market.
Something interesting is that the large established companies in Puerto Rico will discount U.S. revenue from that company if they don't have experience selling in the U.S. because they're only interested in what it can do for them in Puerto Rico. That sounds nice, but they don't really know it. They don't have the relationships. If they don't have the relationships, they're not used to selling into Kroger, Whole Foods, regional chains, then and it becomes kind of something that they discount. The flip side.
Live and you learn. This is fantastic. Other questions? Anyone else? Well, I'll close on one. Define alpha for me? What are you solving for when you lean in?
Hello.
Go ahead, Omar.
Well, I think that as a corporation, we, because we are in this very underserved, and we are pretty much first ones doing, type of venture capital in the island. Instead of asking for a higher return, right, which would be the thing that you will ask for higher return. However, I will be, and I'm talking for myself, right, I will be very happy getting just average returns and then average market returns and all my alpha in non-monetary benefit, which would be, bringing companies to Puerto Rico, bringing capital, from our investors to invest with us in Puerto Rico, bringing people back to Puerto Rico, the students, from going to the US or somewhere else because, they will find good paying jobs here. So I think that I guess I'm willing, I would consider myself very successful. And of course, I have a lot of LPs to respond to, right? It's only one. And things going out, they understand the benefits of the non-monetary benefits of doing this in the economy. And then at the end, we're going to get a benefit somewhere else, right? But on the fund per se, I think the alpha, the non-monetary alpha for us would be great if we can just get a few of those that I mentioned.
Fantastic. Any additional comments?
So for us, I mean, obviously we want to be a top performing fund because we're out there raising capital and we need to sell our product and all that, and that's all great. So we do have that kind of again financial return target that we want to be kind of top quartile fund manager across the U.S. Right? It's not in our strategy. We want to be a top quartile, and we have been able to do that with our first couple of funds. By the way, sorry, compliance. Probably strike that from the record. But also, I think alpha is relative in many ways to volatility. Alpha is related to capital protection, right? So we offer something that, yes, you might get outsized returns on the top end, but you're also protected on the downside. That's really important. So as markets have been up and down in the last few months, mostly down significantly, private credit as an asset class has remained fairly stable. So this is direct lending, right? So QSIP based and kind of liquid credit is a slightly different strategy, but direct lending to small businesses has seen almost zero volatility, zero at high returns. Right? That for me is the true alpha, right? It's can you provide consistent above market returns in spite of volatility, in spite of changing cycles, economic cycles.
Fantastic.
No,
Gualberto?
First the financials and then the non-financial. The financials, we We manage 2 funds. Our first fund fully deployed. We target 19% gross IRR, net IRR, and we're at 17.7% gross. So we have work to do, but we haven't had any meaningful exits yet. We have 3-4 more years ahead. Our second fund we just started deploying. And the non-financial, a very personal one, which I think is to the heart of your question. What got me into this project was enabling local entrepreneurs to know how to use third-party capital, because I believe that will unlock tremendous growth that is underserved right now. So with that comes creating this investment grade vehicle for the financial equity in our community. Puerto Rico has, last time I checked, something like $30 billion of local investable capital in our local institutions, and that money has not had a lot of entry points into activity. And then there's this community of local managers that's creating the investment grade vehicles for that. I think that's very promising and inspires me. That's the alpha I'm looking for, that there's more investable opportunities for capital and more entrepreneurs that know how to handle that for their plans.
And I'm gonna add to that. I mean, for us as well, initially it was growing and creating an ecosystem when we all started at the same time. So 2015, pretty much, we all decided to launch our own funds, and it was to create a local ecosystem to get some of that capital. We currently have around $400 million of capital of AUM. 98% of that capital is from Puerto Rico. There's very limited LPs from the States or from Europe or from LATAM. And that is great because it shows that the locals are behind and understand the thesis and the investment strategy. It's horrible when you look at it, and it's probably the next step in our alpha delivery strategy is how do we attract foreign capital to invest, so non-Puerto Rico capital to invest in Puerto Rico. And until we do that, there's still long ways to go. We're pitching every day to get that capital, but it's probably the biggest roadblock to generating a meaningful impact in Puerto Rico. Alberto,
Sure, go ahead, Alberto.
get the microphone.
That same line. Anita, you probably can give me some light on that. When I initiated with Juan Carlos, my partner, my fund, I thought that probably 80-90% of our LPs will be from Act 2022 because I knew so many of them and they were disproportionately more wealthy than my local friends. But in reality, it turned out to be the opposite, which I'm very happy because one of my goals is that the local group invest in hospitality. So I'm happy with that. What still puzzles me is how we can get more commitment from the new residents in the equity markets in Puerto Rico without having to require through legislation, investment, and all those kind of things that I don't think that are good. My question is, how do you think that we can choose this new group of investors to really commit to invest in Puerto Rico?
No, that's a very fair question. And as I said, when I started this, I said, I'm in a learning mode, right? And so I'm still understanding what is this market and where is the opportunity to allocate. I think there is an opportunity for the wealth managers in the island to come together and present this as frame this in the context of people's portfolios. When someone shows me a project, I don't know how to react to it. But if it was in the context of my overall allocation strategy, and say, this is the part of the portfolio where this fits in, then you have some room to, you have a home for it to go to, right? So that's the first opportunity. If if there is an opportunity to partner with money managers, wealth managers, and frame Puerto Rico in the context of overall portfolio management. So thought number one. Thought number two is, I've only looked at a handful of funds over here, but the ones I've looked at, it's the governance processes are not as clearly explained, and there is an opportunity comparatively, right? Like, so we all are working with what we have been trained by other people who we've done business with. And so when I've invested in other funds, then the market has trained us to expect a certain format in which governance initiatives are communicated. And what's exciting to me about this panel is that there is a maturing asset class, there's a maturing competence across the board representing different asset classes, and they're able to come together. And if you can put a governance layer on top of it and a reliable reporting layer, that makes it that much more accessible and familiar, right? And the third is, for most of the time when Puerto Rico gets framed, it is lots of adverbs and adjectives. And I think the biggest opportunity is nouns and numbers. So it's very interesting to say, oh my gosh, there is immense potential, but it's much more interesting to say what Rudy said, which is, hey, when you have $100 billion market, lending needs to be $55 to $58 billion when you compare it to these five benchmarks. And I'm right now at 16 to 17. That's the white space. And if you can, right next to that, if you say this is the non-performing loans average compared to this market versus some other markets, and if you can quickly see that there is that much headroom, and the non-performing loans as a percentage of portfolio is not that bad because social proof and character-based repayment here is that good, then the opportunity is easy. At that point, it's not that much talking. It's announced and numbers. That's my third opportunity. Did I answer your question? Well, with that, we are on time. Time to drink. Thank you, everybody.